This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 12th. The company is Cipher, ticker symbol CIFR. They had $30 million of revenue in Q3. It's up significantly. Notably, they have a 15-year lease agreement with Amazon Web Services, valued at around $5 billion. So they were a Bitcoin miner. Now they're a data center infrastructure operator. They contract out the actual building, and they get the money from the hyperscalers. AWS is the current one. There is another company, TeraWulf, ticker symbol WULF, that is very similar. Former Bitcoin miner, now data center operator. And they have an agreement with FluidStack, which is guaranteed by Google. So all the money is coming from the companies that we use and sometimes like, the big hyperscaler companies, and it's trickling down. And these companies, Cipher and Wolf, look like they are effectively making the transition to infrastructure compute provider from actually using that compute to mine Bitcoin, which you can make some money on those fees, but it's not nearly as much as you can make by providing compute for massive AI workloads that go into recommendation systems for companies like YouTube to recommend videos, or Netflix to recommend videos, or companies like SAP or Chase or Capital One, who have to run millions of data points into algorithms that take up a bunch of compute in order to give somebody a credit score, or approve or deny them for a credit card, or let someone know if there's fraud happening on their account effectively, accurately. Sometimes they're not so accurate, but they do a pretty incredible job. So all this boils down to Cipher and Wolf being interesting investments in the near term. No one's going to tell you that these are going to be around forever, but right now they're the real estate holders, and AWS and in essence Google are the tenants. So it's not the worst relationship to have. Let's jump into a little breakdown.
This is Sam Putnam.
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 All right, so here's Cipher, 70 million in revenue for Q3, up significantly. They do have a little net loss, but we're still at the beginning of this build out and use of data centers. Sam Altman and Elon are shouting about hundreds of gigawatts in the next 10 years. Just getting to even a tenth of that, 10 gigawatts or 20 gigawatts in the next year or two is going to be a major milestone. So let's see if that happens. They were founded recently in 2021, and then this other company, Wolf, is doing something very similar. They do talk about clean energy. I don't know how attractive that is as an investor right now. It's not like there's subsidies for that under the current administration that are nearly as attractive as they might be, in 2028. But we don't really have to worry too much about the long-term business models of these companies when you've got a little, price agreement flag, call it whatever you want, where you can buy at, $19.70 or $20. You can risk $18.50, and if you risk $1.50, you need a move of $15. So that's one way to do it, but maybe you don't want to risk a full 8%, right? If you actually use the flag, I'm not trying to be abrasive here, but if you really use this flag for what it's setting up as, you can risk something like the low on the current day, and now you're risking more like 30 cents. So that's where this gets really interesting. I'm not totally trying to sell you on trading on a 5 to 10 minute chart. I'm just saying if you do get in, say here, at 1960, you're risking 1940. That's 25 cents, wherever it's at right now. Now you only have to have the stock go up $2.50 to get that 1 to 10 risk reward. And there's enough liquidity here. It traded 1.5 million shares at $20. We'll just call that $30 million in the first 10 minutes. So click of a button, you can put, a tenth of that $3 million and not move the stock, more than say 10 cents. So that's the opportunity here. And we can see this literally working in real time as I record this video. I don't want to make any precise predictions because 8 out of 10 of these fail, so it could go right down here. But the whole point of how this works is if you do lose whatever percent that is, it's a tiny percent, 0.5% on a 10% position. So if your 500K account puts 50K into Cypher and you lose 0.5% on that, well, 1% of 50K is 500, so you lose $250. So you do that 8 times, you lose $2,000, and then those 2 times you make more than $1,000 a piece. And that's totally achievable because if you did put 50K in here and then you did get that $2.50 move up to 22.50, well, that's pretty awesome. That's like 15 percent, which on a 50K position is 7,500. So the math more than works out when it works. And if we look at Wolf, this is setting up similarly, maybe not quite as beautiful as sort of technically attractive as this Cypher in terms of risk reward, just because it's a little more choppy. There's not much volume here. Cypher volume isn't huge, but you can definitely see some volume coming in here today. 3 million versus right here today. This is 1.5 million, and they're very similar priced stocks. So you can take a look at the intradaily and get a feel for which one you're more comfortable playing. And I don't want to use the word playing, but everything is a game at some level. So pick a level. If you buy over 15.2, maybe you risk this high of 14.8, risk 40 cents or 30 cents. And as always, manage your risk, do your own research. But I personally think Cypher is holding up a little better right now. And there are some other companies that are setting up as well. Iron Energy is in the same bucket, but I personally don't think this looks as strong given this is a lower low, or if you want to call it a hold, that's fine, but it would be nice to have this firm up a little bit. The rare earth companies definitely are in the conversation, but there's not a lot of activity here, even though the volume is maybe slightly ramping up. If you look at Cypher and Wolf, actually what happens is the volume is trailing off, which means there's less selling volume. And if we look at, let's look at this beautiful Tesla breakout as an example. So right over here, there was volume that increased, but it wasn't until the actual breakout happened. So if you look at literally the move, in its infancy, the volume didn't increase as the price started to get up and contract. If anything, it actually trailed off a little bit. So, that's something to be aware of. There's less sellers. The volume's actually going to go down even as the price starts to go up. Of course, when everyone thinks it's, breaking out, the volume comes in. But at that point, it's pretty much too late, or you're chasing a little bit. So this one was so technically sound that you still got rewarded even if you bought it a day or even too late. But I mean, if you're at the end of the day, you're only getting 15% if you're late to the party, and you might even get stopped out on a day like that crypto liquidation day of October 10th. So that's sort of the name of the game for breakouts. When they do work, they don't always work, but winning 20% of the time, it means that they can work, well, and fail a lot. So this is a little bit more about Cipher, their Bitcoin transition and this data center agreement. They have a joint venture to develop a gigawatt in Texas, which is a lot. And they do have this debt that they got on their balance sheet, which, gets them some money. You don't really want a company going into debt too much. We can kind of use this cash position, though, just to show how much of a runway they have, $2 billion. Would it be great to pay some of that off? It would. But, I mean, it's just the beginning of these big companies paying the data center companies. So it's sort of a process. And, I mean, profitability is going to be good. But it's just the beginning of these massive contracts. So they have the big backlog. They have a lot of cash on hand as well. So they have debt in order to keep, running the servers. And then, these companies are pretty good for their money. Amazon, Google. So it's not like the debt was just given to them willy-nilly. And then this other company, Wolf, Google is paying the lease directly. I don't know why I used all caps, but sometimes I'm all over the place here. So that's helping them as well. TeraWolf is renting it to FluidStack, and then Google is the backstop. So Google literally gets the tenancy, or just pays the termination fee. I think this termination fee must be big enough where, it's going to be okay for TeraWolf either way. Google also got warrants to buy shares in TeraWolf. So 15% of TeraWolf is a lot. We can actually see those warrants. So it's sort of like getting shares. Well, it is getting shares, but you actually get them when the price of the stock goes over a certain level. So, sorry, there's just a lot of dilution instruments down here so they can raise money. Looks like this has already happened. This shares were converted. So this is what happens. The warrants get converted to shares, or the debt gets converted to shares, which is what a convertible note is. And then somewhere up here, after all of these different convertible notes, these companies have taken on a lot of debt to be able to buy these data centers and build them out. Here is the actual warrants here. I would expect to see Google somewhere on this list, but it also might be through, here we go. Here's Google. So they're not registered, so they have to literally be registered with the SEC with this registration statement. But 70 million warrants at a cent. So they can exercise these at any time. The price is, of course, well above a cent. They were issued, in late August. So it's something to be aware of. Google could sell them at any point, but I don't think Google is, that kind of warrant holder. There are warrant holders for smaller companies. This is a relatively small company, but I'm talking about, companies that have a market cap of like 100 million, where you have to watch out for warrants because they can be a bit of a spiral to death, and the stock price just goes down and down as they exercise the warrants and then sell the stock. But this is a long-term agreement, 10 years. So that makes this attractive because this company, TeraWolf, is small enough to have that big growth opportunity, but big enough where you're not just basically dealing in borderline financial fraud as a retail shareholder. So that's nice. And this is a lot. 200 megawatts is a lot. If it works out to 4 billion, that's over 10 years. So I guess each year this works out to something like 300 million. So it's maybe like $1 per megawatt per year. Not $1, $1 million per megawatt, $1 a watt. So it's nice to have these little rules of thumb, but really all that matters for us in the near term is to know that these two companies have big companies backstopping them. They're not super overpriced. They can make incredible runs of 100, 200% or more. And right now they're firming up for moves. I mean, Cypher is already moving. I know I said I don't want to call, this one as a win, but it looks good so far. Again, still 80% chance of failing, but that's why you have a small risk. So if you like these ideas, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to follow the rest of the stream, head over to stockscommunity.com and try that out for 7 days for $25.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.